Hello, hello. Thank you for joining us. So here we are, week before the Bank of Canada's rate change announcement. What's going to happen? Josh is joining me here today. Josh, can you tell me what's going to happen here in your mind in the next week?
For sure, Jay. Thanks for doing this again with me. Yes, we're at an interesting time for sure, right? So we're looking at market predictions for what the Bank of Canada is going to do next week on January 29th. And there's a handful of things that are impacting how we expect the Bank of Canada to act here. So the first off, let's start with the actual predictions. Right now, the market is pricing in a 77% chance that we're going to see a 0.25% rate drop. So that's a bit smaller than the 0.5% rate drops we've been seeing, but it's still predicting a downward trend on that interest rate. Previously, we've been expecting about 0.75% total drop this year. And so the first one is likely to happen next week. Now, there are a few reasons behind why that's likely the case. If you like to hear this type of content, please click like, subscribe to the channel, and hit that bell for notifications. The first big reason that we're expecting the Bank of Canada to be okay with this is inflation is still coming down a little bit, but not that much, which is good. If inflation's going up, obviously they need to increase the interest rate. So we are seeing some downward push on the inflation. That might be because of the GST holiday. It's tough to know. Obviously, we have to look at multiple months trends with that. But you know what? There's another version of inflation that the Bank of Canada pays close attention to, and that's core inflation, which is, Jay, it's essentially the same thing, except it takes out mortgage interest costs, which we know has been a major contributor, and it's also volatile. It takes out food and energy costs. So taking out those more volatile items, we're actually at a 6-month high on inflation for those items. And so that upward trend can be a little bit concerning. And of course, the big one that's on everybody's mind, there's a new president in the United States. He was inaugurated earlier this week on Monday. And that same day, he reiterated the 25% tariff threat against Canada. And he even suggested that it might start as early as February 1st. So that definitely leads to some concern about the economy here in Canada. And you know what? There's varying opinions, but I'll share with you one from BMO's chief economist, Douglas Porter. And he says that we believe that this this trade uncertainty is kind of overriding everything else. And given the inflation data that the Bank of Canada got earlier this week, that leaves enough room for the Bank of Canada to do that 0.25% drop, even if it's just for risk management purposes. Other economists are saying more or less the same thing. But yeah, we can basically expect a 0.25% rate drop almost for sure next week.
So interesting, isn't it? You know, it's funny with this tariff thing. I work a lot with builders, pretty intimately with builders, and it's like I'm already hearing from some of the people that manage their production cost, right? And they're like, look, lumber already is starting to go up. People heard what he said, and it seems like there might even be some panic buying going on with lumber. So we're already seeing, you know, this market volatility increase, and so I do think that's a very real threat that we're going to need to watch. So looking forward to next week's announcement from the Bank of Canada. Thank you for joining us. As always, we do these videos every week, try and keep you on the pulse of what's happening in our real estate market here. Please like, subscribe, follow us. It really helps us grow our channel. We appreciate you watching. Can't wait to see you next week.
Bye-bye.